Kia ora everyone, welcome back to our next edition of Econ Talks. Gareth, we're still here, sitting here in alert level 4. Not a fun place, but of course important to ensure that we do get rid of COVID-19 in the community as quickly as possible. We've seen over the first week or so of alert level 4 a very substantial hit to the economy. Now that was something we always expected to see, but the numbers are still quite jarring when we look into it. We've seen that mobility, for example, has fallen over 40% from usual levels. We've seen spending activity nearly $400 million lost in terms of spending so far. Of course, we're hoping that we'll regain some of that as we start to move forward, as we start to move down those alert levels and people start spending again. You'd expect by this point everyone's got a fair idea of what restaurant or takeaway they might be getting the first day we move to alert level 3. But we're also seeing, quite interestingly, that those numbers, although quite, again, a significant hit, not quite as bad as they were the last lockdown, of course. The decline in spending, for example, this time round averaging around about 49% down from usual levels. Lockdown 1, for the first 7 days, we had a 62% fall. And we're seeing that quite clearly in terms of supermarket shopping. Kiwis are still going out and buying food. They're still buying a bit more fuel as well as last time. So all of that indicating that, look, the economic hit is large, but probably isn't as large as last time round. Now, we've done some analysis on that. What is our latest estimate in terms of how much activity can operate at alert level 4?
Yeah, I'd certainly back up those observations. Even just going out on my daily walk, there seems to be a few more people out and about than there was back at level 4 last year, where it was very, very quiet. So I think there is a bit more activity going on. If we think back to lockdown last year, their expectations were that the economic activity would be running maybe 35 or 40% below normal levels at level 4. Our latest estimates suggest that, in fact, looking at this lockdown, we're expecting level 4 to lead to a restriction in terms of economic activity of around about 25, 26%. So you can see that's quite a significant improvement on what the expectations were last time. Part of that's a function of what we did actually see through 2020 and how the economy performed, but also just knowing that some of those trends that you mentioned, like spending, it has been holding up better. At level 3, when we eventually get back to level 3, expecting the hit to economic activity to be about 11%, so running at about just under 90% of normal at level 3. And that does reflect the ability of industries like construction, for example, to actually get out there and do more work at level 3. And there's plenty of other businesses as well where you are less restricted at level 3 rather than having to stay at home. So having crunched all the numbers at the moment, the latest news from the Prime Minister saying that we've got the whole country at level 4 for 2 weeks until the next review next week, and then Auckland and Northland staying at level 4. Possibly she was indicating for another 2 weeks after that. Certainly Auckland looking likely with the cases still going on there. So having run all those numbers, it looks to us like there'll be a drop in GDP in the current September quarter of around about 7%, or maybe between 7 and 7.5% from what it would otherwise have been. So not as big as the hit that we saw last year, but that does reflect, one, the economy performing better, and two, the fact that hopefully this will be a shorter lockdown than we had last year as well. One of the other areas, of course, we're not expecting such a hit as the labour market. Last year we saw job seeker numbers climbing by something like 60,000 through that lockdown period. We're confident, though, and you've been looking at these numbers, that the labour market will hold together better this time around.
Yeah, absolutely. And we know as well from that analysis we've done recently that we expect a larger proportion of the workforce can continue operating. 63% of workers still operational at level 4. Now that's up from 53% when we ran the numbers last year. And then when we look at alert level 3, we're looking at over 80%. So again, that's reassuring in terms of more people being able to operate, and of course businesses better able to respond to these higher alert levels. The July numbers, job numbers, that is highlighted, still a pretty strong level of activity coming into lockdown, and so that momentum is going to help. We know that the labour market is tight. We know it's hard to find workers, and that there is that pressing need to still find more employees. Concerningly, we have got the first week of job seeker numbers out from the government since lockdown has been in force, and we did see for the first time really the first substantial increase in 2021 of job seeker numbers. The number of people on a job seeker support benefit went up by just over 2,000 people in the week ending 20 August. That's a 1% jump. Now, it doesn't sound huge, but the trend has been very clearly lower across the entirety of 2021. And so that does just give you a little bit of pause and cause for concern around the outlook for the labour market. Now, our thinking at the moment is that that could just be a knee-jerk reaction, given that there are always going to be some businesses that level 4 is absolutely crippling for their economic activity. But we haven't seen the rises so far. We haven't seen the concerns, Ed, either, that we're seeing sort of massive issues emerging in the labour market. Importantly, the government's announcement so far around the wage subsidy indicates that there's actually been lower take-up than you might have expected. The official numbers showing over 100,000 people supported within the first 24 hours of that scheme last Friday, but since then we've had other announcements from various government ministers indicating anywhere from 400 to 600 odd thousand workers being supported. Now that's below the 1.25 million we might have expected, and also what we're hearing is that there are very few large businesses taking on the subsidy this time, looking likely that they're just waiting a beat, figuring out how bad this lockdown is going to be and how quickly they might be able to resume activity, remembering that although they might be financially entitled to it, there's a fair bit of goodwill or not that might emerge if they do take that wage subsidy and eventually turn some massive profit like in 2020. So far it seems like the amount of support being required by the labour market isn't as much as we might have thought. But at the same time, you are seeing just some cautious signs around the edges that this is not going to be a completely above board change to alert levels. There is still some economic pain that emerges with it. There's that lower spending activity. There are restrictions on what can be done, and there are jobs in the offing here. So it's concerning, but at the moment we do expect that this is more a knee-jerk reaction than anything large. Of course, as we continue to go through this, we'll be watching those weekly numbers for job seeker support and the wage subsidy uptake. We'll be monitoring card spending activity around people movements and traffic and similar to try and get a feel for how bad this has knocked the economy. But as you've said, Gareth, after a pretty good run over the last few months, we have seen lockdown 2.0 put a bit of a setback on the cards for the economy, possibly a 7% contraction. But again, hoping and expecting, in fact, that economic activity bounces back quite strongly as we move forward. And we'll assess that bounce back and how long and how hard this lockdown 2.0 affects the economy on one of our future editions of Econ Talks.